Okay, cattle on feed report. I really wasn't going to start with cattle on feed, but I read it and now I can't get it out of my mind. Cattle on feed report coming up on April the 17th. We've got a ways to go before we get there. Before that, we get Thursday's World Ag Supply Demand Estimates report. So we'll get supply and demand numbers on, well, we do include livestock in that, but primarily we're looking at it for our grains, oil seeds, and cotton. So let's jump into grains, and the corn market is where we start, and we're in mixed territory, but lower on the old crop. The old crop, the May, July, and September contracts, that's what's in the bin. December is new crop unchanged at 483, and then the March part of that new crop, and it's a tick higher at last check. Soybeans, they fall under the oil seed category of the WASDE report. We're higher across the board. The May through September is the old crop, and it's trading 3/4 cent to 1.5 pennies higher. And the November, what we'll put in the ground or have put in the ground, 11.58 penny and a half higher. What about wheat market? Here's Chicago, and July is what's in the ground. We'll harvest that late spring, early summer, 6.10 1/4. It's up 3 3/4 cents. We have hard red winter wheat, July up 3 3/4, 6.27 1/2. And I mentioned the cotton market. Cotton kind of falls in its own little subheading there in the WASDE report, and the December up 6 points at 75.81. Our guest today is Chris Swift. Chris is with Swift Trading in the studio with us, and it seems like some of our markets, okay, all of our markets have been trading off of uncertainty in the Middle East. And I guess, can we look down the road? What happens after, if you will?
Well, and you and I attended several meetings in January and February that we had no idea that this was coming about. We looked at where we're going to have to market corn in a really bad market and big acres. And fast forward to today, we've had exceptional military action and unbelievable price expanse in a lot of commodities we did not think that was possible to come. So what do we do about that now? And while the military action is taking place and the heat of the battle is on right now, 6 months to 12 months from now, it's going to look totally different than what it does today. What can we do today that whatever our need is out in the future to secure it? And let's take corn, for example. December corn been trading in a 2-year-long sideways trading range. It breaks out to the upside and consolidates. To every corn farmer out there that really needs to market some product, this will be an opportunity that you can sell that corn outside of the 2-year range and do it with options to leave the top side open, because we're not sure what the next 6 to 12 months. If you're a cattle feeder, you got to pay attention. Corn broke out of a 2-year-long trading range to the upside and is consolidated. Let's see if we're going to need corn in the next 6 to 12, maybe even 24 months. Let's get busy and do something with it now in the options market. So today's events really should be viewed 6 to 12 months out, because that's what we deal in. We deal in the future, not today market. So let's try to figure out what we can do that's going to benefit our operation 6 to 12 months down the road, while today's prices are very active.
Yep, good points. Chris is with us here in the studio, and you mentioned livestock, so hang on.
Yep,
I've got some questions dealing with the cattle market coming up. Stay tuned. We've got more on the other side. This is Market Day Report. How about we start here with the hog market, and hogs are lower. After a higher session yesterday, actually a really good session. It was the biggest one-day move in actual dollars that we've seen here in this hog market since, I want to say November or so. Anyway, good rally yesterday. We're giving back some of the gains here. June at 106.77. It's down 97.50 cents lower on the July contract. Let's go to the feeders. Feeders have added over $20 over the last 7 sessions. We've seen a rally, a 7-day rally in the feeder market, with the exception of the April. which did close lower yesterday. And we've seen a 7-day rally for the entire market for live cattle, being led really by that April contract, which is higher right now, but we're starting to see a pullback in the more active June and the deferred contracts after we saw cash trade last week $10 to $13 higher. Chris Swift's with us, Swift Trading. Maybe we start on that cash side because that was quite a bump higher in cash trade.
It was impressive that Greeley, Colorado had to buy cattle. Their shift came back on again, so they bought cattle. Cost them $10 more than what it did the week before. Interestingly enough, in the cattle market, same lines as what we discussed earlier in the grains. These are phenomenal prices. 6 to 12 months from now, what are they going to be like? And if we look at the interpretation of the board, which hasn't really changed much of anything except for basis, and note that we're still in a very inverted carry. If you want to sell cattle at the highest price, sell them today. It is the highest price available. But we've seen something different. In the back months, the basis has narrowed greatly, almost to even in some cases, for which presents an opportunity that the cattleman has not had in the last 3 to 4 months, an opportunity to market inventory deep into the future at the exact same price or very little discount in comparison to what it is today. So whether you think it's going a whole lot higher or whether you think it's going a whole lot higher, the board structure is telling you today's the highest price, and we have now given the back end up really high, which produces two things. One, to the backgrounder, thank goodness I can sell my cattle at the same price. But to the cattle feeder, I don't have the advantage of the really deep discounts in the back months that I can buy those feeder cattle at instead of having to pay top price for them at the present. So again, we've been gapping up and down in the cattle market the last 3 or 4 days. We've double topped in some instances. We've created some new historical highs in some instances. This is probably a top, may not be the top, but a top, whether $4 or $5 higher, $4 or $5 lower, you have really got a mix of fundamentals now instead of just straight ahead.
And we didn't even talk about the idea that the southern border could start reopening, and if it does, maybe not the entire border, maybe it opens in certain segments, let's say Arizona, if you will, you know, what that could do to the market as well, which means one thing, got to come back next week.
All right, we'll do it.
All right, Chris Swift is with Swift Trading. Always a pleasure to have you here.
Absolutely, Tony.
Can't wait for next week. Thank you, Chris. Well,